Hey, it's TSLA, and this is episode 235 of the Orange Pill Investor. And I did a video last time about the cost of limited upside. And so I think that begs the question of what are the benefits of limited upside, because otherwise, why do it? And I think for the most part, not everyone has heard of MicroStrategy or has enough money to even, buy 100 shares. Um, and the wheel, selling puts and covered calls doesn't really require a lot of cash. You can do it on cheaper stocks, and but this is, number go up is not promised. So, if we're looking at this chart, I mean, other than the first quarter when we got amazing returns, 50 to 170, it's basically been horizontal ever since. So up, down, up, down, up, down. And you can hodl through this. You can dollar cost average through this, and you'll be fine. But not everybody groks MicroStrategy, and selling options doesn't really. You don't need to have lucked into the best stock in the history of the stock market, and I don't want to say only only people who haven't figured it out, need to you know figure out something else. But a lot of people lose money in the stock market. So what if you're a fucking dumbass? Like, what if you what if you buy, what if you FOMO into stuff and then you panic sell and all of that crap? Or what if you're, looking for the next Tesla and you invest in, uh, what was it, Lordstown Motors? I think Stephen Mark Ryan calls it Fraudstown Motors, or Nikola, or a bunch of other half-assed companies that you think are going to the moon, and it's just a bunch of smoke and mirrors. Well, even these mining stocks will probably underperform, certainly MicroStrategy, but hell, they may even underperform Bitcoin. But it's possible to run the wheel and, buy in here somewhere. Covered call gets called away somewhere in here. Maybe you get assigned back again. Selling puts. You can sell puts all the way through here. Then you start getting assigned again, and then you get assigned, and then your covered calls get called away again, and then you get assigned again, called away, assigned, called away, assigned, called away. And so really, it's kind of like buy low, sell high for dummies. And maybe I'm not too bright, and that's why it's worked out for me so well. Uh, but the real reason is the legit explanation of what that is, when I'm not clowning around, is it's going to reduce your cost basis, and that's going to increase your chances of success. So if you came in here and you bought Clean Spark at $10 a share at the first of the year, you're down $1 a share. But if you've been selling, if you sold puts into it, that's going to reduce your cost basis probably down to $9. And if you're selling covered calls anywhere in here, now your cost basis is going to be, if you get 25 cents a week, after a month, your cost basis is dropped from 10 to 9 to 8. Another month, it's down to 7. And after, 10 months of that, your shares cost you absolutely nothing. So then it doesn't matter if the price is $20 a share or $9 a share, because if you reduce your cost basis long enough, then your cost basis ends up going to zero. And if you if you keep selling covered calls into it after that, your cost basis starts to become negative. So that's kind of the point. And for me, I don't really necessarily need MicroStrategy to 20x from when it was $50 a share. If it goes to 1,000, I think I said that the scenario was that it potentially could maybe 8x from there by the way that I do it, and sacrificing unlimited upside. And even at an 8x, that's life changing for me, and I'll never work again. So that's kind of like I can just take the sure thing, and regardless of what MicroStrategy does, as long as it doesn't go into the toilet because of some black swan, but as long as it just trends sideways or just appreciates at all, then by middle of 2025, I'll probably never have to work a shitty job ever again. So risk and returns everybody has to decide for themselves. And to be quite honest, if if MicroStrategy is going to, even something kind of bearish, like what if the only thing that MicroStrategy does is double from here? Um, that means that we barely probably get 100,000 in Bitcoin in 2025, which I find hard to believe. But even if that was the case, the best play would probably just be to go out here to options, not financial advice, of course, but probably go to like December and literally just buy as many of these calls as possible, and then wait for the price of MicroStrategy to double. That would print a bunch of money. But that's like if this was the only thing that you did in the stock market, that's kind of some pretty risky YOLO degenerate type stuff. And but the other thing that I like as well is every time I sell a covered call against shares, I can buy these long calls with the profits. So to me, if I'm bullish, that's kind of the best of both worlds. Um, but it's not necessarily the strategy for someone who's just literally has confidence out the wazoo. If you're sure that MicroStrategy is going to 300, 400, 500, whatever, then selling covered calls might be, the wrong play, because at some point when it rips, you might regret missing out on, something like this, 70 to 200. But number go up is not promised. We got, key man risk. Michael Saylor could step in front of a bus, or when somebody's that mega rich, it could become the target of an attack, or who knows what. Um, I know there's a little bit of consternation among some folks that MicroStrategy has some of their Bitcoin at Coinbase, and there's a lot of distrust about Coinbase. And even if Coinbase was 100% legit, if the federal government ever told them to hand over their Bitcoin, they're damn sure going to do it, because they're not going to risk getting put out of business just for some principled stand. Any company that shills shitcoins can't really be trusted to stand on business. So there's a lot of risks in MicroStrategy that don't exist for Bitcoin, and I think that's preaching to the choir. Like, anybody who came to MicroStrategy through Bitcoin is already orange pilled, so they've heard all of the not your keys, not your coins memes at this point. Um, and I don't necessarily think that the federal government would step in and do anything serious to MicroStrategy like this cycle. But if the country's circling the drain and they want to start annexing money, uh, who knows? We, this country seized gold back in the day, so there's no reason to think that they wouldn't tamper with a publicly owned company. So there are some risks to think about that don't exist with Bitcoin itself, which I guess that's probably what justifies the returns. So the insane amount of returns that you can get with MicroStrategy are probably well earned, because you you have to sacrifice the returns that you're going to get from the most secure asset in human history. You know, you can't invest the same dollar in both assets. You got to choose one or the other. So that's the point of potentially turning a 20x return into an 8x return, you know, limiting maximum upside, is when you sell a covered call, the buying power is deposited into your account. So it's kind of like knowing what your returns are going to be 7 days from now. That money was already deposited, and the only way that you can screw that up is by, uh, you know, panicking or whatever. But that's the trade-off. So hodling exposes you to unlimited upside, and selling options against those positions reduces your cost basis over time to a point where it makes it very difficult to fail. And everybody has to decide for themselves what they want. Do they want more risk with more potential returns, or whether they want to reduce some of that risk and limit their returns? All right, I think that's enough for now. Be good, y'all.